How to survive a recession. Talk of a recession is once again in the headlines. But what is a recession? In simple words, an economy is in recession when the gross domestic product, or GDP as it's commonly referred to, falls for 2 consecutive quarters. This leads to rising levels of unemployment, falling retail sales, and contracting measures of income and manufacturing. What happens in a recession? Firms earn less revenue. They lay off workers or stop hiring, and some people lose their jobs while others face pay cuts. When people have less income, they spend less, and firms earn less revenue. The ultimate result? We enter a recession. It could be a worrying time for many people as day-to-day costs rise and employment becomes more insecure. What are the probabilities of a recession in the near future? Research firm Ned Davis suggests that there is a 98.1% probability of a global recession in 2023, and investment banking firm JP Morgan calculated a 92% probability of a global recession. So, going by these numbers, there is a high probability of a global recession, especially in developed economies like the US and the UK. How did we end up in this economic situation? The COVID-19 pandemic in 2020 and the ongoing Ukraine-Russia conflict kicked off an economic downturn. Central banks around the world lowered interest rates and printed more money to increase the money supply and stimulate the economy. This led to an increase in inflation as the consumer price index increased by around 10% in the UK and 9% in the USA, which led to central banks increasing the interest rates to combat spending. This created a new set of problems. When interest rates go up, firms borrow more and invest less. Consumers also tend to spend less as borrowing becomes costlier. Who likes to pay for higher credit card interest rates or higher rates on consumer loans? So both consumption and investment suffered, and we ended up in this current economic situation. There are certainly some tough times to face ahead, but here are some top tips on how you can prepare for a recession. Number 1, save an emergency fund. Cut your unnecessary spending and save the maximum amount you can every month. It is always advisable to have an emergency fund that can pay for at least 6 months of your expenses. Keep this fund in a savings account, which you can easily withdraw money whenever you need it. Number 2, have a budget. How can you cut spending and save more? Go through all your expenditures and see what you can cut. Then make a monthly or weekly budget. Try to keep your spending within the budget so that your saving plans are not affected. Number 3, postpone borrowing plans or big expenses. Thinking about buying a new car or taking a mortgage loan for a new house? My advice is to postpone any big spending plans until a better time. Rather, hold your cash and watch out for further developments in the economy. Number 4, consolidate any debts. Now's the time to review any debts and move them to lower payment plans or switch to 0% interest-free credit cards or accounts. Ideally, you want to work towards paying off and clearing your debts for the future. Number 5, look for a second source of income. Financially successful people always have multiple sources of income. Recession or no recession, look for time in the day to start a side hustle. Turn off the TV and start looking at what can bring in some extra income. Ask yourself, what different skills do you have? Can you take an additional freelancing job? Can you teach or write or create content or use your skills in other ways to earn extra income? Can you rent out a room? What about selling goods online or even affiliate marketing? Number 6, get promoted. Job security in a recession is a must. Make yourself indispensable by being an asset to your employer. Technologies change, business processes change, and skill requirements change over time. Change is the only constant. Keep a step ahead to ensure you remain employed, or even better, get promoted. Being flexible and willing to learn will help your security in your current job and make you an attractive proposition for new employers. Watch out for economic developments or changes in the business world. Read, watch, or listen to important events in your specific employment genre that are taking place and shaping the economic future. Remember, knowledge is true power, so adapt to new situations and keep learning and growing. Update your skills to stay relevant. Ask yourself the following. Are your core skills going to stay relevant after 3 years? After 5 years? What skills are most in demand now? Which skills are getting more relevant with newer technologies like artificial intelligence and robotics? Which skills would increase your employability or opportunity for promotion? Talk to your boss. Are there any additional courses your current employer can send you on to increase your chances for a promotion? Can you learn a new skill online? Worst case scenario, and your company does make you redundant, you'll have valuable skills to present to those companies hiring in the market and will be a step ahead of the competition. Number 7, fix your mortgage rate. With interest rates on the rise, a variable mortgage rate makes budgeting hard. And without a ceiling rate in place, your mortgage could increase beyond your financial means, putting your home at risk. Talk to a professional mortgage advisor about how you can secure your payments. Number 8, declutter and sell unwanted or unused items in your home. Now would be a good time to go through your home and cupboards and have a good clear out. You can sell any unwanted or unused items around your home. There are a number of online websites that specialize in selling pre-loved items such as clothes, toys, furniture, and other personal items. Number 9, start investing. With the economy in a downturn, many stocks have fallen in value. For example, the S&P 500, the most influential index globally, is currently about 25% below its all-time high. The tech-focused NASDAQ 100, meanwhile, is more than 30% off its all-time highs. In the UK, the FTSE 100 has held up quite well due to its energy exposure. It's only about 10% below its all-time high, but the same can't be said about the FTSE 250. It is currently about 30% below its highs. What does this mean for first-time or even established investors? Now could be a good time to buy. Billionaire investor Warren Buffett says that the best time to buy stocks is when others are fearful. Of course, there are risks, and the market could fall even further. But for those with spare money and patience, the investment could pay off. Number 10, don't panic. There have been 11 recessions between 1945 and 2001, with an average duration of 10 months. Compared to 18 months for recessions between 1919 and 1945, and 22 months for recessions from 1854 to 1919. Because of the great changes in the economy over the centuries, it is difficult to compare the severity of modern recessions to early recessions. But they all come to an end at some point. So let's take stock of our finances, sit tight, and ride it out.